Okay, so also property tax time. You know what? I'm looking at my desk, and I've got so many different municipalities, all these property taxes just staring me at the face to pay the property taxes. So sorry to put that spin on this weekend for your thoughts. Oh, my gosh, it's property tax time, and we got to get them paid. And they're just telling me every day I see them, pay me, pay me. And I keep on going, I'm too busy to pay you, but it's going to have to happen.
Not only do you have to pay them, but you also, if you want to get your grants, you got to apply for those right before July something.
Yes, and they're important to apply for. If you're a homeowner, if you're over the age of, I believe it's 55 or 65, there's some grants out there for you. So apply for them and make sure you get it. So I wanted to talk about interest rate hikes. Interest rate hikes, they're moving up fast. It's happening so fast. It's a whirlwind, and we're all seeing the reality of it right now. And for many, it's scary, but really, it's just going into a balanced market, which we typically have. And so we've just been really spoiled lately with the market the way it is. So you got to just kind of put on your big boy pants and prepare for a balanced market. And how do you do that? And make sure that you're able to, have quality of life and not be overrun with mortgage payments and this and that. So I wanted to actually mention our first segment here, talking about actually from Better Dwelling. An article came out, and I thought it was very important to mention on our show about our local real estate here in the Fraser Valley, but overall in Canada too. And then on our second segment, we have guest Kevin Walland, and he is on the other line right now, and we will introduce him and have a great chat about commercial real estate for our local area coming up. So without further ado, the actual caption of this article is most Canadian real estate gains will be wiped out starting this year. And this is from Oxford Econ. So Canadian real estate prices have already begun to see growth slow, but this is just the beginning, they say. Oxford Economics is reiterating its forecast as factors line up to return to affordability. They see home prices falling by 24%, wiping out most of the gains made since the start of 2020. The declines are expected to begin this year and go right into 2024, a slow but sustainable process. So Canadian real estate prices are forecast to fall, they say, by 24%. Now, we saw locally residential prices from February to March fall about 10, 11%. Then we saw from March to April, we saw another slowdown of around 7, 8%. And then the next month we saw around 5 to 6%. So it's like it came off the hill pretty fast, and it's slowing down, but it is still coming down. And again, more of a balanced market is what we're entering into this summer. So after cresting in late summer 50% above their pre-pandemic level, they forecast home prices will decline that much by 2024. And that's from Tony Stillo, and that's the firm's director of economics. So the forecast calls for a significant drop, but not enough to wipe out all gains since 2020. So it's not all doom and gloom. Home prices increased roughly 50%, and this is, again, is overall Canada. In our area, we saw like 100%, like literally in the last couple of years. So since the start of the pandemic, they're saying about 50% for Canada. So math challenge folks may think that's just half of the increase made. However, the rate of decline applies to a much larger number. A 24% price drop by 2024 would leave a gain of about 14 points since 2020. So that's roughly 3.3% compound annual growth over the period. Not a bad increase by any means, but not the kind of growth many investors expect. Even with the price drop, affordability won't be restored in any capacity yet. We'll circle back to the point later on, but Canadian real estate prices, it absolutely can possibly fall by up to 40%, though, if delayed. So this is what they say, that no doubt policymakers are already being pressured to prevent any price drops. A wealth effect is when people spend more money because they feel rich. Rising home prices are believed to have boosted spending this way. Concerns that falling home prices may reduce consumption are valid. However, capital economics doesn't see it being as significant as many assume. Lower house prices will likely have a modest negative effect on consumption, but they don't expect it will result in a recession or undue stress on the financial system, is what he explains. He says, should the price boom continue unabated, risks grow of a larger crash with dire economic consequences. So in addition, market inefficiency is more likely to reduce consumption more than reduce wealth effect. High inflation erodes consumption by forcing consumers to pay more for less goods. Younger prime consumers are also dedicating more of their income to shelter. This diverts from consumption and reallocates capital to those less likely to spend. It's sort of the reverse Robin Hood scenario. Longer economic inefficiencies also require much greater corrections to return to efficiency. They reiterated a warning that if home prices continue to rise, the fallout will be much worse. A drop of 40% and the risk of a financial crisis is what they previously stated the outcome would be. Falling home prices sound bad, but pushing a market to its absolute failure is even worse. The sooner a market corrects, the more quickly it becomes efficient. So Canada won't be economically devastated by a real estate crash. It's unlikely that the Canadian economy would be devastated by this, home prices by falling. Strong economic growth, a tight labor market, and ideally stable inflation will help. Higher interest rates will cost high debt consumers more, but savings will help. So I would encourage anybody to check this more out so that the fear is gone and it's reality and it's balanced. And so there is a housing affordability index that you can check out. And the index is 0.9 to 1.1 is affordable range. And they forecast that if things aren't corrected, it's going up to the 1.4 range. So got to get it back into the more affordable range. So that is the article on Better Living. Hopefully that gives a little insight and some encouragement to everyone. So doesn't that sound a little better, Curtis, than kind of maybe what you're hearing more so in the media or the news, I should say?
Well, it gives us a better explanation of cause and effect and how it all plays out, right? So I think that is, important information to have because a lot of times, you look at the headline, housing prices are going to drop 40% and you're like, oh, my home value, what am I going to do? But when you realize that it's, probably not going to be 40%, it's going to be less, and you realize how much homes have gone up in the last 5-6 years, it kind of balances out.
You got it. And it's the magic of, hold as long as you can, reinvest, remortgage when the rates are good and you have that equity built in your property, and all about timing and just being aware of the timing that you're in and doing the best what you can with where you're at.
Absolutely. And I'm very happy that I bought my house last year when interest rates were pretty much at rock bottom.
Yes.
All right, well, we should probably take a quick break right now. If people want more information about what you do as a realtor, where can they go?
MicheleCummins.ca.